Good morning and welcome to this weekly market update from AGM Markets. Today is the 15th of May 2012. Charts I'm going to be going through today are Euro Dollar, Cable, Dollar Yen, Aussie Dollar and Gold. Basically just giving some sort of weekly outlook, some sort of bias towards the week. Basically just going through technical analysis. Will not be making any trade calls or recommendations. You trade at your own risk. For any new followers, we have 3 moving averages on these charts. The red one is a 55 simple, the purple is 100 simple, and the gold is a 200 simple moving average. Okay, let's have a look at Euro Dollar. This is the daily chart. What we've been looking at for the last sort of few weeks really is this fib move here. So we have the day from the low to the high. We were talking about the 50% zone and how it got broken last week. Basically, this 50% line I'll just highlight it for you. It's been holding very, very nicely for, since pretty much the start of the year. You can see all those supports around there. You move it around there. Was holding very, very nicely. But last week we had that big gap down after the French and Greek elections. This was the gap down around here. So I'll zoom in on the 1 hour so you can see it a bit clearer. Where have you gone? Sorry, bear with me 2 seconds. Yes, we had the gap down. It was about a 70 pip gap down, which meant that we opened below the key 50% line, which has been the pivotal sort of line in the sand. So we had that gap down there, which you can see, which still hasn't filled. But on this daily, so we had the gap down here, and then we bounced off this 61.8% level. But as you can see, we then bounced up, and I said, because I did the video last Tuesday, and this was the day the Monday's candle, and we said it's all about if we get a daily candlestick close above this 50% line, and you can see we didn't. We tested it twice. A classic example of previous support acting as new resistance. We came up to this 50% level and we failed to close above it, and that has meant that we've had this continued sell-off now. We didn't get any good reaction off the 61.8, but now we're at this this 78.6 level. We haven't quite tested it to the pit, but we're a little bit shy of it at the minute. That stands at 128.07, so just shy of the 128 level, which I'm sure will be an option barrier level. So yeah, for me this week the key line in the sand will be this 78.6 Fibonacci retracement level, which stands at 128.07. Are we going to get a good reaction at this level? Are we going to get a bounce? We can already see we're starting to get a bit of a pop up today, but it's not exactly looking that convincing. So today will be an interesting day. It'll be an interesting day. See what sort of candlestick we get. If we do get a big pop up, the moving averages are still quite a way away. The 100 days stands at 1.3112. But you're going to get a lot of people selling into the rallies, in my opinion, because Euro is looking heavy. All the Greek stuff out at the minute. Are they going to leave the euro? What sort of implications will that have on the Euro Dollar, the whole of the Eurozone? So the thing I'll be looking at, you can see there, I've just switched to the 1 hour chart and I drew a trend line resistance from those 1st of May highs, and you can see it's been reacting quite nicely. We had a few bounces off it, and you can also see that the 55 hour moving average is kind of coinciding with this trend line resistance. So I would not be surprised if any sellers did come in at that trend line resistance on the 1 hour chart. And in terms of the fibs, a big fib, let's say this is the kind of recent kind of swing fib, the 50% actually kind of coincides with the bigger 50%, so that's a kind of key confluence area there. That's presuming that we've got the low already put in. You can see it's quite a nice little confluence area there, so I'll definitely keep that on the charts. If we do get any sort of bounce in euro, you could have that recent fib on the charts. But you've got to remember that the big 61.8, which was That's the 61.8 on that chart there on the daily. If we flip it to the 1 hour, that also comes in there around 1 spot 29.52, and you can see we had a nice little reaction at that level when it decided to come back up. So when we broke below it, you can see there we had a nice sort of 1 hour resistance area there at that 61.8. So a lot of people were selling into that. So that's why you should always keep that's why you should always keep fibs on your chart, especially even if it's not the right setup, because they do act as support and resistance levels. So that 61.8 will be key if we get a nice sort of break of this trend line upwards, but it is starting to look a little bit heavy on the 1 hour. And but yeah, it is all about that trend line resistance for me in this week, what happens at that area. Okay, let's have a look at cable. What do we have on cable? We spoke about it last week. There's still the same sort of trend line support on cable. You can't ignore it. And we said last week that the odds were for some sort of retracement. We got, especially after such a sort of bullish week, well, 2 bullish weeks there, 1, 2. We said last couple of weeks that we were expecting some sort of retracement. It looks like that. We said it looked like it wanted to come down and test the trendline support, which is looking like it will do. It's still coming down, but we have already had some sort of reaction at the 50% fib from that recent swing off the trend line, and we're starting to get some sort of bounce at that 50% level, which stands at 1 spot 60.60. So it'll be key to see what happens around this level. It looks, I mean, especially this is the 4 hour chart. It's already starting to look a bit heavy. The current 4 hour candle is looking very, very bearish indeed. So yeah, that's what it's all about for cable really. The 50% level and the trend line support. If we get a break of that, then we've got the 61.8, which stands at 1 spot 60.02. So pretty much a 160 handle there. Yeah, that's all for cable. Let's have a look at dollar yen. On dollar yen on the daily. All I've really got to focus on is this recent fib here, but it hasn't really been reacting very technically at all, which has been quite surprising, to be honest with you. Last week's weekly candle was quite bullish though, not quite hammer. We do have a bit of upper wick there, but actually I suppose, I mean, you can say it hasn't been acting that technical, but you can see this 50% area is starting to act as resistance here now. The last week's candle and this week's candle already has come up, tested this 50% level, and it's started to come back down. So what do we think will happen this week? Well, you can see we already start to come down, but this 100-day moving average is also holding at the 79.63 level. That's what it currently stands at. But you can see it's kind of, I mean, not a massively interesting chart for me. All it's doing really is just currently the last sort of few days just chopping between this 50% level and the 100-day moving average. So we just need to get some sort of clear breakout really. If we're going to get a clear breakout, then we need a daily candlestick close below above the 50% level, and if we're going to get clear breakout below, then we need to get some sort of solid close below the 100-day moving average. Then we could come down and test this 200-day moving average at 78.42. Okay, let's have a look at the Aussie. Been quite volatile at the Aussie, especially the last sort of 2 weeks. You can see the 2 big bearish candles there. In terms of any trend line, what do we have? I mean, that trend line got broken. Now you put the low out at there, and we've already got a daily candlestick, a weekly close below that level. So last week's candle closed below the trend line support and the 100-week moving average as well. In terms of daily fibs, and we spoke about this last week, this big daily fib here from those 0 spot 36 lows to the 1 spot 0855 highs, and you can as you can see, we've already broken the parity level now, and we're testing this 61.8% level. We've already had a nice little bounce off it already, but it's all about kind of today's daily candlestick close really. See if we can get any sort of reversal candle. If we get a bullish engulf, then we may start and pop up, and then we may come and test that 50% level, which is at 1 spot 0121. So for me, in terms of Aussie, all I've really got interest in at the minute is this 61.8 level at 0 spot 99.47. What's going to happen at this level? We've already started to get a bit of a bounce. but are we going to get any more momentum to the upside? I mean, we've had a very significant sell-off already in Aussie. Had a big retracement, purely just because of all this risk-off stuff at the minute, all the stuff in Greece, etc, etc. So if you are going to look to sell into the rallies, you don't think that fib's going to hold, then you can have that similar to Euro really, that the trendline resistance. I mean, Euro and Aussie have kind of been doing a similar sort of thing, as Aussie is a risk-based currency, and as all the stuff at the minute is all about the Eurozone. Euro dollar and Aussie dollar have just been doing a very similar thing really. So yeah, for Aussie, all about 61.8 level and what's going to happen at this trendline resistance. To see if we can get any. I mean, to get any more momentum, we need to have a clear break of this trendline resistance. Okay, that's the forex done. Let's have a look at gold. What do we have on gold? We have to talk about this trendline support that we talk about every video, because it's very good to keep it in mind. And we had a key week last week. We had a weekly candlestick close below this trendline support, which has been holding since 2008. So in terms of the weekly, all I have interest in really is what is going to happen at this 100-week moving average. If we get any further sell-off, what's going to happen at that 15-13 level. But we are testing the key support at the minute, and I think we spoke about this before. This fib here from that recent swing low, you can see it clear on the daily. The 61.8 is what it's all about for me on gold. Will this level hold? It's the key sort of binary. You can see we had a nice reaction there. We also had a very nice reaction there, and we're now sitting, well, just short of it currently at the minute. That stands at 15.42, so that's the line in the sand for me. If any dip buy is going to come in, then they most probably will be coming in at that big level there, 15.42 level. But yeah, we've had a big sell-off in gold, especially the last couple of weeks. We've seen a big dip below, sustained hold below the 1600 level now. But yeah, in terms of a technical level, it would all be about that 61.8 for me. Okay, let's have a look at the forex calendar. What do we have coming out today? The headline data out today is the German ZEW economic sentiment number. That's forecast at 19.1. Previously was 23.4. We have the Eurozone flash GDP numbers quarter on quarter, forecast at minus 0.2%. Previously was minus 0.3%. At 1:30 UK time, we have the US CPI numbers. We've got the month on month there, which is forecast as a slight decrease there, 0.1%, previously 0.3%. With the core CPI numbers forecast to stay the same at 0.2%, and we have retail sales out as well. Tomorrow, the headline data we have at 9:30 UK claimant count change, forecasted an increase. 4.9 thousand, previously was 3.6 thousand. The unemployment rate is expected to stay the same at 8.3%. With the Eurozone CPI data out year on year, expected to stay the same at 2.6%. At 10:30 we have Bank of England Governor Mervyn King speaking at the same time as the inflation report comes out. So we'll see what he's saying about inflation. That'll be very interesting to see, and we'll see what impact that will have on cable. At 1:30 we have the US building permits, forecasted at 0.73 million, previously was 0.75 million. We have the housing starts as well. A kind of lot of mid-tier data here. You can see on this is the Forex Factory. I mean, we have the industrial production, we have capacity utilisation rate, we have Draghi speaking. But the next bit of headline data out of the US is the FOMC meeting minutes. On Thursday, the main data we have is weekly jobless claims, forecast at 370,000, previously was 367,000, and we have the Philly Fed Manufacturing Index at 3 PM, forecasted at 10.6, previously was 8.5. And on Friday, to finish the week, we have for any Canadian dollar CAD traders, we have core CPI data and the CPI, normal CPI month on month forecasted. The normal CPI is expected to dip at 0.3%, and the core CPI is expected to stay the same. And we also have the G8 meetings as well on Friday. They're all day Friday, and then on Saturday as well. So be interesting to see what happens there regarding the Eurozone and Greece. And yeah, be careful on Sunday as well, because we may get a big gap down. Okay, that's all for today. Hope you had a great. I hope you do have a great week trading, and I'll catch you next week. Thank you very much.